Hello, welcome back. Hope you had a nice weekend. Today we're gonna take a look at Salesforce, a very well known tech company. Who doesn't love the tech sector? It has been beaten down massively, this company as well as the tech sector as a whole. And you will see here that in the last 3 months it has lost 26%. A company that has generally been a very high flyer here, and at some point was more than $300 really. Now it's back to 222, and a potentially interesting opportunity for buyers, I suppose. This is why I wanted to take a little bit of a closer look at the company, see whether it makes any sense to add it to our portfolio right now or not. So the first thing to notice here is the market cap of the company, which is sitting at 218 billion dollars, and the outstanding shares approaching 1 billion. But let's see how they have been moving. They used to be 600 million, so they are massively higher. Actually, it's like 30, almost 40% higher than what it used to be back in the IPO days. So the company has been printing a lot of stock and financing itself through a lot of stock here. Good to know. And obviously, this is a negative thing, generally speaking, for investors because they are getting diluted. And so the current PE is at 122 here, which is a massive PE, very high. And the good thing is that the next 12 months one is projected to be at 53.5, which is less than half actually, which is a very positive thing. But let's examine the financials of the company, which is not paying any dividends right now. It's a growth company, obviously, Salesforce. Company has some very growing nicely revenues, really. And the nice thing about the year-over-year growth is that it can be projected in the next few years, because it's basically the same every year, sitting at 24 to 28 every one of those last 5 years, really. So that's very useful for potential projections into the future, actually. The year-over-year growth of the gross profit, the same thing, really, and everything in the green here, nice to see. The net income of the company, 361 billion. This was lower here, some outlier of a year, but then 4 billions and then 1.7. Company seems to have a lot of variance over here, which is very interesting and a little bit weird, actually. It looks like there is steep increase also in the administrative expenses. Could play a role here, and also some cost of revenues keeps increasing, although it's not too high, I suppose. But yeah, interesting to see and notice here that the net income is actually very variable here. So the balance sheet of the company, we will see here that the total assets of the company keep increasing massively, really. So that's very nice. And liabilities of 30 billion at the moment, and a total equity of 57 billion from 10 billion back in 2018. So massively growing company here. They're getting a lot of equity from their operations, I suppose. I'm assuming they're making a lot of free cash flow. We're going to examine it later. And the cash from operations in the green as well, from 2.7 billion in 2018 to 6.1 right now, which is pretty great. And the cash from investing, negative as expected, a good thing. Some acquisition happened over here in the last 12 months, paid 14.9, almost 15 billion here. That's a lot, but it's okay. I mean, if the company is growing its operations, I mean, if you are to invest in the company, you may want to take a little bit of a closer look if you really want to see what kind of acquisition happened there. But I wouldn't be too worried about this unless you are an executive and have a lot of information about acquisitions and all that, or you want to spend the time really to discover a lot about the acquisitions. And what about debt here? Well, the company is getting a little bit of debt, it looks like, right? 8 billion here and 3 billion here. So the company does get a little bit of debt. Now, that's not always a negative sign. I mean, don't just be flustered from this. It could be a good thing. Free cash flow 2.2, 2.8, 3.6, 4, 5, 5.5 here. A steep increase. Very nice cash flow from the company. Very cool. What about the solvency ratings? Yeah, the debt is actually, compared to equity, is 25%. Is more than fair. So not any real issue here with the debt. And we saw earlier that the current liability, the total liabilities are $30 billion right now. And the company is making, last year it made 5.4 billion in free cash flow. So it's about 5 years of free cash flow that you need to repay all debt. That's fine. That's not a big deal. So no big issues with debt here. The company seems to be faring well. Now, in terms of the free cash flow, you can get an average of these 5 years here, and this will be about, let's say, 4 billion, maybe a little bit less. But if you take a 4 billion average of free cash flow a year, give it a multiple of 20, you get an $80 billion potential market cap. You give it a multiple of 30, and you get what it was like 4 multiplied by 30. You get if you multiply it by 30, you get a $120 billion for a market cap. So you have to multiply it by 20 to get $240 billion of a market cap, which surpasses this current market cap. So for a multiple of 4, the current since the current multiple of a free cash flow is $4 billion, you would need a multiple of about 55 to reach this current market cap, which is close to the forward PE, really. That's a little bit better than the PE, because the company's free cash flow is actually better than I would expect. The situation for cash flow is actually better than I would expect based on the current PE ratio. It looks like the company is making some good free cash flow, even better than its earnings, really, so that's very, very good. However, the free cash flow multiple is a little bit high, because again, it's about 55. It's about as much as the current forward PE. Now, obviously, with these kinds of companies and tech companies, for the most part, you may be willing to pay a little bit more in terms of a multiple because of the growth, which we examined earlier, and I'm fine with that, and I like it too. And the company seems to be growing nicely. This is what I liked about this company. Like it's increasing year over year, every year, really. And so, while currently it may be a little bit overvalued based on the free cash flow, I think it's an interesting target to at least have your eyes on, and maybe potentially add a little bit. Now, if you're a little bit more conservative, you may want the price to fall a little bit if possible. If that happens, it may never happen again. Really, who knows? But if you can get it at around 200, I think that would be a pretty interesting deal here. And again, you're getting a company that has nice growth and a lot of free cash flow. So these things are very, very important, and practically very, very little debt, really. And so these things are very, very important. And you and I myself would potentially be fine with giving it a little bit of a higher multiple in terms of its free cash flow than normal. Usually I want to be at around 20 to 30 in terms of a multiple. But if you want to get into the space and you are interested in Salesforce, maybe at a price of 200, it's the best deal. But even now, if you really want to enter, you are going to be paying a little bit more. But again, if you are willing to stomach paying a little bit more for the potential growth, which the company seems to be having, then maybe it's an interesting opportunity for you. So I would buy the company, but I would want to get it at a lower valuation. The company is great. The financials fundamentals are looking awesome, and at this point is basically finding the best entry point for buying the stock. At the current entry point, you can buy, but it's gonna be a little bit overvalued. So know that if you are willing to buy Salesforce. It doesn't mean that the company won't make money, because it probably will, and likely the stock is going to keep on rising. So yeah, that's what I wanted to talk about in terms of Salesforce. Hope you liked the vid. If you did, you may want to take a look at our Discord channel and subscribe to both here and the Discord channel. You can find the link below in the description box of this video. And if you like watching these videos, you may want to take a look at this one that I made a little bit earlier. And it's about Tesla and examining the company, talking a little bit about it. So thank you for watching, and I'll see you in the next one. Bye-bye.